Good afternoon and welcome back to Markets Today. I'm your host, Mbithe Mwema. Today, we continue to look at the impact of debt at a national level, especially the impact on equities. Do we expect to see interest or no interest? In other words, do you expect the bearish stance, that is the market actually continuing to get lower than its 10-year mark? Do you expect this to continue or not? Will investors be putting money in fixed income, giving it to the government of Kenya through the treasury bills or the bonds, or will they find opportunities to actually continue to invest on the Nairobi Securities Exchange? We are joined by Mr. Abraham Kamau. He's the CEO of Miradi Capital. Welcome to the show, Mr. Kamau.
No, thank you very much.
All right, before we talk, take a look at debt, would you have any comments with regards to the revision downwards of pump prices?
I think that was bound to happen, because even if you look at the world prices, they're basically stable and gone down a bit.
Okay.
But you're right. There was a bit of worry about Saudi Arabia, because I mean, the production went down by half,
yes,
from 7 million barrels to about 3.5. But it looks like somehow the market has adjusted to that.
Okay.
But I think the downward trend was long overdue.
All right.
But as I told you, and as I've said here before, I think we also need to look at our formula, how we work this formula out.
Okay.
Yeah, that formula has been intact for too long.
All right.
Yeah.
What does that mean for inflation, at least between now and December?
You see, the inflation is already low. It's about 3 point something now, and being that low, then it means it could go lower. But then, but remember, we have a psychological. It should be between 2.5% and 7.5.
Yes.
So we're still within the band.
We're still within the band. Okay.
So I don't think it will still hit 2.5.
Okay.
Not as yet. So as long as it's within that band, we can live with it.
So in other words, don't expect any movements by the MPC with regards to the benchmark rate.
I see. Now that you bring it up, I think MPC, we need to try something new. I mean, okay. I think we've overdone 9. All right. Yeah. I think we need to do something about it. I think
but
9.
There needs to be data to justify it. I mean,
but even now, I think the data we've had in those 9, not all of them supported that staying at 9.
Okay.
Yes.
So if you were sitting in the Monetary Policy Committee today, would you reduce the benchmark rate from 9% to a lower level?
I'll push it to 8 and see what happens.
Okay.
Sometimes I think sometimes you don't have to know what's going to happen. Sometimes you need to test, because status quo sometimes, because it reached a point where we're not very sure whether this tool works anymore.
Yes.
Yes.
Okay.
Yeah.
All right. Let's look at debt. Last week we hosted you here on one of our shows, and
yes,
we were talking about the potential extent of what would happen if our debt levels were reviewed.
Yes.
On the same day, there was a review with regards to the Public Finance Management Act 2015,
yes,
removing the 50% cap of debt and reviewing this upwards to an absolute number of 9 trillion.
Yes.
We are at 5.9 trillion.
Yes.
What are your initial thoughts with this change?
For me, there's nothing wrong with changing a limit, but I had a problem with changing it from a ratio to an absolute amount, because first and foremost, it was not very clear how that 9, why 9, not 8 or 10 or 11 or whatever number we want to put. That's number one. Number two, we've not put any conditions on how fast this headroom should be consumed. But now that they've passed it, it's law. So now the debt as it is complies with the law.
And we cannot be lawless, so we must hit the 9 trillion mark.
Yeah, so we will start going towards that.
Yes.
But that does not in any way solve the problem of serviceability. That okay, monster is still with us.
All right. Yes. By serviceability, what do you mean? By
serviceability, I mean our ability to continue to pay this debt on time. Because if we are growing debt the way we are growing, and the economy and this debt is not going to assets that are generating enough money to pay it,
okay,
then we'll continue allocating more and more of our scarce resources to pay debt at the detriment of development.
All right.
Yes.
So the allocation of this particular debt, there's no formula with regards to how they got to a 9 trillion number.
Yes.
Do you have a sense of how much will go to development and how much will go to recurrent expenditure?
You see, the first one I've seen is the bond they want to issue. And it looks like it's tagged to an infrastructure project. Okay. That would be a good way to go.
This is the infrastructure bond?
The infrastructure bond. That would be a good way, because each debt is attached to a certain project. Because that way, at least we're sure, at least most of it, if not all of that money, goes to that project. But when you have a blanket debt that comes and sits at Treasury, then we allocate the way we want, then we're not so sure. And you see, at the level we are, the new debt needs to come and generate more than its portion of debt, okay, because there's a lot of debt inside that we need to pay for, because our allocation on ratio basis of how much we are using of our scarce resources to pay debt is not acceptable.
Okay.
Yes.
All right. So every year, I mean, at least in this current fiscal year,
Yes.
the government is targeted to borrow about 700 billion,
Yes.
right?
Yes.
So what do you think would actually need to happen for us to move from 5.9 to 9 trillion? Is it a year? Is it 2 years? Is it 3 years?
You see, it will depend on the level. First of all, whether we want to change our theme to balance our budgets or to continue increasing our deficit, to do deficit budgets. If we choose the deficit budget route, then we could consume it probably in a year or two, because let's say next year we decide to do a 4 trillion budget.
Okay.
And KRA can only raise 2.5. There are 1.5 trillion, boom, gone.
Okay.
So it just depends on the size of budget we want to go to, and to what extent KRA can fund that budget.
Which means that we are certainly sitting on an element, on a ticking time bomb with regards to higher tax rates.
And it's precisely. But because you see, you can never solve an economic problem with legislation. And that's exactly what we've done. We just compliant.
You can never, okay.
Yes,
you cannot
can't.
solve an economic problem with the legislation.
Yes, it has to be a definite and a deliberate policy, which has to be the monetary or fiscal.
Okay.
Yeah, because law is just law. It says the debt shall not exceed 9 trillion. Finished.
But it could be, I mean, because this is a proposal that is coming from Treasury,
Yes.
meaning that they are relying or trying to allude to an element of fiscal policy, which could potentially mean that they're concerned about aggregate demand, and they want to push government consumption with particular projects so that they can be able to enhance the GDP consumption factor. What are your views on that?
To me, I hope that is what it is. Because yes, if government spends money in this economy, it will spur its growth. But the question is, what will it be spending it on? That's number one. Number two, I tend to believe that also we have to start again moving away from government being the almighty in terms of growing this economy. We have to, they have to start scaling back towards more of policy making, more of environment enabling.
What do you mean by that? Tell me. It's a big term and we hear
yes.
it all the time.
Environment enabling means reviewing the environment in which business is done.
Okay.
Compliance regime, licensing, how much it costs you, how many offices you have to knock, and how far apart those offices are.
Yes.
That's number one. Number two, in terms of the multiplicity of tax laws and the complexity of them, how well can we simplify the tax regime? So that we're saying, if you're in X business, you pay one tax, which is easy for, because right now, if you're somebody tax compliant, they'll hesitate.
Okay, I like what you've brought up.
Yes.
The element of tax, and your thinking is we need economic reform with regards to policy.
Yes.
So for one, you're saying that this particular move to 9 trillion, it's not necessarily a good move. Right?
No, not necessarily a good move, not necessarily a bad move, but depending on what they do with it.
Okay.
Because see, that headroom, if all that goes to capital expenditure, I don't think it would be a bad thing. But we already have a 5.9 trillion debt, which you're on the verge of not being able to pay, or we are paying at the expense of many other things.
Okay.
So it has not solved that problem.
Okay.
Yes, it has just solved the problem that at 5.9, it was in breach of the previous law.
Oh, it was, all right.
Yes.
So let me go back to that. So at a national level, the government wants to take on debt. The question is what they're going to allocate this debt to. But then at the micro level, at the household level, at the private sector level, there's an anticipation or an expectation of higher taxes. How do you thrive in business in this kind of environment?
You see, what is probably going to happen, if you look at the economy as it is, KRA seems to be the easiest options for KRA normally is to increase taxes for existing people, and instead of growing the tax net. So high taxes are coming, but again, you're taxing people more in an economy that is not doing so well, and you can see the amount of redundancies in this economy. So we really need to think whether our money is all going to come from tax, because you've seen the rest of the country. I think it was Ghana that instead of going upwards, they went downwards.
Okay.
And it's done very well.
All right.
Because lower taxation and compliance normally come in the same vehicle.
Yes, they do.
Yes. So, and high taxation and evasion also come in the same vehicle. So with Kenya, I think even the tax rates are quite high because the number of people who are taxed, because I think the other day they were saying it's just about 4.5 million people.
Okay.
The rest of us are just riding on these public goods, which we're all on free lunches.
Okay, Abraham, hold on to that thought. Let's take a quick break. Look out for the closing bell on the NSC.